Good morning, everybody. It is Friday. This is 26th of January. We are approaching the end of the month. It is now 8:31 a.m. EST. So we are, let's see here. Yeah, some news just came out. The PCE came out. I'm not seeing a whole lot of movement in the market as a result of the PCE, which is an inflationary metric that gets put out, I think, once a month. So without that movement, the news must not have been very poignant. We're going to take a look at it right now. Let me go ahead and bring that up on the chart. Jump right into the content here. Move some charts around real quick. All right, cool. Core PCE. So the inflation metric comes out twice a month, right? And the first inflation metric is going to be the CPI, Consumer Price Index, and that seems to be the one that has the most punch when it comes to, maybe having an effect on the market, in particular the currency markets, but really all markets. And then the second one is the core PCE price index, which is month over month. And it looks like it was right in line with expectations. So basically what happens in situations like this, where the number is in line with expectations, is that there is a lot of money on the sideline waiting for that data to come out, right? And once that data comes out, let's just say for a moment that the data was that inflation was high. Well, then the market assumption would be that, okay, if inflation is high, then we'll probably end up seeing cuts sooner in the interest rate, right? Because the interest rate is how the Fed controls inflation. That's one of two tools that it has, and it kind of seems like it's pretty much the main tool at this point. So with that, if the inflation comes out lower, then all these all these hikes that were done last year are perceived to have done their job. And therefore, people are like, okay, maybe they're just going to cut interest rates, or maybe they're not going to hike them. That's the wisdom, if you will. Okay. Now, the other way around is if the inflation comes out high, then the assumption here is that, oh, well, then they're going to have to hike rates, or they're not going to cut them sooner. And then the market moves in that direction. And in this case, you're looking at the euro versus the dollar, which is a good analog for a lot of different things, because the euro versus the dollar, most things are traded against the dollar, right? So if you look at the stock market is going to be like, Microsoft versus the dollar, or Amazon versus the dollar, or whatever company versus the dollar. So things are going to move in a similar manner because they're all traded against the dollar. So let's just say, like for example, here, very simple example, you have the euro versus the dollar, right? You have EUR versus USD. That's what the EUR USD looks like, right on the top left-hand corner of, see it right up here, EUR USD, or just on the watermark in the background. And if the dollar gets strong, then the euro is going to get weak in comparison to it, which is what we're kind of seeing just in a very short term on the chart. The chart you're looking at right now, each one of these candlesticks is 5 minutes worth of price action. This is a very low time frame chart going back to about midnight my time, so about right up to the London Open. And if the dollar gets strong, even if the euro doesn't change at all, if the euro just in reality, in comparison to like everything, doesn't really change, but the dollar gets strong, that's going to make the euro look weak against the dollar because it's all relative, right? So that's why the euro is going down. Just in this real short-term look, the dollar got a little bit stronger, and so therefore the euro in terms of dollars is going to get weaker. Now the same would happen, although maybe not in the same proportion, but the same kind of thing would happen, especially over time with stocks. So let's look at, say, Microsoft, right? Microsoft is traded against the dollar. You just don't see the USD, right? On the, like when you look at a stock, it doesn't say MSFT USD. It just says MSFT Microsoft. Well, if the dollar gets stronger, unless Microsoft itself gets a lot stronger at the same time, then Microsoft is going to go down in value only because it's priced in dollars, right? So let's say that Microsoft doesn't in reality get any stronger, right? It just stays not stronger, not weaker compared to everything else except for the dollar. Microsoft stays stable and the dollar gets stronger. That's going to make Microsoft look weaker. Okay. So therefore, Microsoft will go down in terms of dollars, right? And this is how these inflationary type data work when they come out. When you have, inflation come out and say, okay, well, the dollar, because inflation is low, we think that the interest rate cuts have done their job. Therefore, I'm sorry, the interest rate hikes. Let's say that again. Because the inflation is low, it seems as if all the rate hikes did their job. And so now we're going to be able to not hike the rate or even cut the rate in the near future. And people are going to assume that the dollar is getting weaker, and the opposite of what you're seeing would happen, right? So, this economic data, for those of you who are a little bit more gambly, and I know that's a terrible term to use, people use these data to trade, right? When that news hits the market, you see some significant movement in the price, and people will actually trade that. But I'm going to issue a warning, right? You got to do some research on this because I don't give investment advice, but what I will tell you is what I do and don't do. Now, in this case, we were not able to tell what would happen to the euro or the dollar, right? We didn't know the future. And let's just say that we did know the future, like, oh, you got some kind of weird inside word to, whoever does the PECE data, which is impossible, probably. Let's just pretend in some weird world that that's the case. And you knew that the euro was going to drop in terms of the dollar. You knew that the price would go down. You knew the future. And so you went ahead and took a short. Well, look what happened here. People who went short, their stop losses were probably above. This is a lot of structure right here, over several hours worth of structure built, and people's stop losses where they would get out of the trade if it goes against them, those stop losses are very, very likely going to be right up in this area, right above that structure. That's where a lot of stop losses are going to go. If someone goes short, stop loss will be up here. That's just how that works, right? And that being the case, the market went up, knocked all those trades out, and then went down. So even somebody who knows the future, they have to be concerned because the market makers will knock you out of your stop loss. Now, I know it's a bit sounds like a conspiracy. Why would all these groups take this and push it up and take people's trades out? And then what's the deal with that? Well, that's just how they make money, and they're not allowed to manipulate price. However, they can use these data as an excuse to manipulate price. It's like the banks have carte blanche, right? Now, I don't talk to people at whatever banks are doing this. I'm not saying I have the inside word on that, but I can pretty much tell you with a very high amount of confidence that I believe that's how this works. And I am so not alone in this. Like, that's a very, very common opinion, right? But it is just my opinion, right? Not investment advice. So if you're going to try to trade the news, understand that you may run into trouble, right? And some people, what they do is they try to bracket, and I've actually done a bracket before. You can make money if you're extremely nimble. If you want to do a bracket trade, nimble meaning that like you're not in the middle of driving a forklift or doing some kind of work, and you could jump out of a trade really quick. Or if you can set up your trade to automatically take profit, that's possible. You can make money like that on news events, but it's not. I mean, most people don't do well. The most people I talk to don't do well. There's like one dude I've talked to who made a living doing that because he had a lot of technology that was able to help him out, and he was purely a forex trader. So that's just a little bit of word to the wise if you want to do that. So we have the data that has come out. Let's go ahead and take a look at. I think the hot topic right now is going to be Bitcoin. So we'll move over to crypto and we'll do some charting. By the way, if you're watching this, do a like, do a subscribe, do a follow, all that stuff if you're watching on YouTube. And if you're watching on X, please like this and follow my profile. I'm going to back out because we're looking at a very low time frame right now. So let me but if you see here, even that data affected Bitcoin too, right? I mean, the data came out right here, right there, and then price turned in the same direction as it did with the euro. So this data doesn't just affect forex markets; it affects everything. In fact, let me just do a quick look at say Microsoft, since we were just talking about it, and you'll see. Oh, well, I guess Microsoft is strong. So maybe that in this case, I'm willing to guess that the money was just waiting on the sidelines. And once the data came out, people were willing to go ahead and put the money in. So in this case, I bet you all the tech stocks are doing something like this, right? Like if I just go to the QQQ, we'll look at Bitcoin. Just let me take a quick look at the NASDAQ. Yeah, so all the tech stocks, it looks like they were just waiting for that data to come out and the money was in the silence. Now, this is, oh, okay, that's a lie. Look, this is pre market. For a split second, I forgot the market doesn't open for an hour. So it ended on a high note yesterday. That's the top of this wick. And the bottom, these lines right here, this is the actual price right now in pre-market trading, and it did go down as expected. Okay, that makes a lot more sense because that kind of surprised me a little bit, to be honest. Of course, not a whole lot surprises me anymore, but in this case, yeah, Microsoft is acting and the QQQ are acting as they should, where the pre-market trading has gone down just like everything else. So let's just MFST. Let's make sure we can MSFT and verify that. Yeah, see, look, the pre-market price is way down here. So this is probably good. And this is significant. It's about a 0.5% down opening on the day if price stays down here up into the open for another 48 minutes or so, right? So it looks like it might gap down on the day, but we'll see about that. There's a lot of time before the open, and the QQQ and probably a lot of stocks right now are in this position where the open price is lower, but it seems to be climbing back up just a little bit. So back to the Bitcoin, to the Bitcoin, horn. Let's do BTCSD. Okay, so, and then we'll back out to a higher time frame. We'll take a look at something discernible. I'm going to go to the daily time frame. So what we're going to now look at is basically price on the daily. Now, Bitcoin has rallied up nicely. Bitcoin dropped out of this consolidation where for about a month, maybe a little bit longer, let's see here, from December 2nd until, so almost 2 months really, price mostly hung out inside of this consolidation that appears so far to have been a distribution, which is where price has gone up for a long time and the smart money sells to everybody else. The ETF was a sell the news event. What does that mean? Well, I've been saying for at least a couple of months that basically the ETF, when that was announced, would probably be what is called a sell the news event. So there's a term called buy the rumor, sell the news. And that's basically where so when a lot of news comes out, or a lot of the times when news comes out, what'll happen is a lot of retail money, a lot of mom and pop, people at home, not institutional money, they're going to buy. They're going to get very excited when the news comes out. And before the news comes out, a lot of people understand that news might be coming out. It's called the rumor, right? So a lot of people are buying the rumor. The rumor hits, they start to buy. And then when the news comes out, it's very common that the opposite of what is expected will happen, where a lot of retail puts in their money. And here's the thing about it. Institutional money, or at least smart money, they like to take advantage of volatility. They like to take advantage of liquidity. And liquidity just is people buying and selling. Liquidity is just people entering the market and exiting the market. Speaking of exiting and entering, we have the gorilla in the house. What's up, brother?
Oh, hello, my friend. I was about to message you with my usual text as I am, where.
Yeah, I saw you pop up. So we were just talking about the concept of like buy the rumor and sell the news.
Sure.
So, and we haven't even what I've been doing lately as people watching knows, I've just jumping right into the content. So without like doing the whole commercial, but if you want to know more about Algo Factory, there is a QR code in the top right hand corner, and then we're going to discuss right here in about 15 minutes at the end of this what we do. So here's the thing. A lot of smart money likes to go short. They need people to give them what is called exit liquidity. They need people to buy so they can get out at the top. And right as the ETF hit, a lot of the retail money was buying, and the smart money was getting their short orders filled. They wanted to bet on the price going down. But in order to do that, first they had to exit their longs, and then they had to enter their shorts. And in order for that to happen, they needed people to be buying. They needed retail to get, to help them get out without breaking the price down. Because think of it this way. Let's say you go to a swap meet, right? And you want to buy a bunch of hammers, right? So you go to the hammer place, you go to the construction area, whatever, and they have about 50 hammers. And as you're buying these hammers, they know that they can get more money. They don't want to sell them all to you, so they start to hike the price up because they want other people to buy the hammers. They figure, oh, this guy really needs hammers. Let's go ahead and bilk him. And so he's buying all the hammers in town. Raise the price. So they raise the price of hammers, right? And you're buying them, and the price keeps going up. All right. So what happens if now you have bought all these hammers at twice the normal price and you're like, screw it, I want to sell them all? Well, guess what? They're not going to sell it to you for a lower price. They're going to, they're not going to sell, they're going to buy them from you for a high price. Like, oh, this person needs to sell all their hammers. Well, I'm not going to buy it at this high price. We're just, that's not how it works. Like, we know that this person wants to sell all of their hammers, and we're not going to just go ahead and buy them at this really high price. They just bought it from us. We are going to make money. So no, there are no buyers at that point. The price of hammers is too high at that point. They know they can go to another store and get hammers cheaper, so they don't buy hammers. And while people are selling, there are a few people who might buy a higher price hammer. And then as the price goes down, more and more people are willing to buy. Right. So that's how that works. It's a supply and demand issue, very basic economics. So the smart money can't just sell everything all at once because they'll crush the price down in the market. That's the point of that hammer story. So what they need are retail to get very excited and buy. And that allows them to exit at a very high price because the people buying are keeping the price up high. So that's why buy the rumor, sell the news works, because there's a lot of liquidity that comes in when the news hits, and the smart money takes advantage of that liquidity. And they have a lot of metrics. They have like genius quant people, AI, whatever, and they have an idea of when that energy is going to end, and then they ride that down on their shorts. So it's a typical thing, and I saw it coming. Now, long term, I still think it's going to go up. I mean, that's a very obvious thing. I'm very bullish on crypto and Bitcoin, at least for the next 15, 20 years. So, or I'd say certainly for the next year and a half, bullish, right? So that being the case, I don't think we've seen a bottom just yet. I think that this move down that we're seeing was like a strong move down, and now we're going to go ahead and see some short covering, people who are getting out of their short positions, which is effectively buying, right? So you're seeing a lot of upward pressure just because price grabbed a little bit of liquidity from down here and is headed up. But I do think that a couple of things will happen, a couple of possibilities, at least for the near term. Now, the gorilla has given us some kind of high level intel yesterday, in fact, with regard to what will probably happen in the next few months with Bitcoin. And he's getting that from some pretty high level people. And I can't say who they are just because I really don't know who they are. I mean, I have an idea. Even if I did know who they were, I would pretend not to. But I think Bitcoin will basically rotate either in this range, right? Or it'll get rejected. It'll head up for a little bit right now and then get rejected and head down for a deeper range. And that range could be a few different things. That range could be just for, and again, I don't know how long. This might only be for a short time. It might not, but I think price may kind of rotate in, say, between 38.3 and say 40.05 in this general area. It might go back and forth, or it could actually dip deeper and kind of range down in this area. And these two lines that you see are, as of yesterday, some liquidity that I marked out based on charting, and I marked out based on real liquidity on exchanges. So the last thing we'll do on Bitcoin, unless I get some kind of requests, we'll be looking at that liquidity on the Kingfisher. And if you watched the Ethereum video that I put out yesterday, put out on YouTube, you'll see the Kingfisher in action, or pretty much if you just watch this show every day, you'll see it in action. So you can do a little spin to win, see if I can get some free credits. I did not. I hope I got credits left. I'm gonna have to pay these guys. You can look, the Kingfisher is more than just liquidity. Okay. Oh, looks like I don't have any credits. Oh, well. So we'll do that later. I have to just buy in again. So the Kingfisher has a lot of functionality besides liquidity. And looks like my subscription is up, so I need to pay for some, but they have options data. They've got heat maps. I think you can actually trade from the Kingfisher's way bigger than just liquidity, but liquidity is very valuable. And as of yesterday, there was a lot of liquidity down at about 36,000. and I doubt that's changed. There was liquidity to the upside, and I did say yesterday the price could pop up to grab that liquidity, which is what we might be seeing right now. There's a lot of liquidity up around, say, 42, 43,000. So what we might be seeing is a grab of that liquidity and then on the way down. And then we'll have to see what happens after that. Yeah. So let me see what's going on here. I got a note from Algo or from Clown World saying, just finished yesterday's trip show. Epic. One of the best shows you have done so far. This is in our private group. So if you're watching on YouTube, you can't see this. He says, very important. Okay, one of the best shows you've done so far. Very important info. We all need to act fast to do what we can do to secure our assets. I've spent 10 years doing this already, so I'm in good spot, but more can be done. Understanding markets and how to take advantage of them is the final skill I need to finalize the. Okay, I'll skip that part. Oh no, I won't skip that part.
Don't skip that
part.
I
thought I saw divorce. I thought maybe it was like a personal note.
No.
Yeah,
read the whole thing in that tab.
Yes. All right. Understanding markets and how to take advantage of them is the final skill. I need to finalize the divorce with the ruling elites in my government. Yes, I still will pay my tax cattle fees. Yeah. What he's doing. He's not saying he's not going to pay taxes. He just wants to be independently wealthy, so he doesn't have to work for him. I knew Be Good would come up with a liquidity map. Thank you, sir. Let's finish Clown World here. Perhaps this is back to Clown World. Perhaps we could take a look at my Algo next Friday and talk about it. And also some observations I have done after being a member of Algo Factory for what feel like quite some time. I need to listen to the show. Yeah. Oh, I'm glad you like the Solana report. Yeah, Solana's. I got more on Solana this morning. I might actually do another show on that. But yeah, Clown World, thank you for all of that. And we do next Friday, so a week from today. Hopefully, we can take a look at your algo. For anybody watching, an algorithm is just like a way to trade. It's not necessarily something you have to code or you don't have to know computer science. It's very simple. So don't worry about it. Anybody can do now. You already do algorithms. Go over to the YouTube channel, look at the video, what is an algorithm, and you'll see what I'm talking about. Long story short, everybody in here is building algos. We got people who have never traded that are building algos, right? We bring you through the basics, and we're always there. We're in the chat. I not quite 24/7, but we're in the chat most of the time, answering questions, things like that. So long story short, this is a great way to make sure that just in case the world kind of takes a different turn, like sort of a COVIDian turn, and perhaps you lose maybe your job. This is another way to secure your ability to get income. Nothing's guaranteed. You got to, and of course, we don't hand algorithms out. You got to build it yourself, but it's a good opportunity. Come on over, zap that QR code. We'll talk a little bit more at the very end here in a few minutes, but we did have a liquidity map. So let me just bring this up to the top here. And it might be a little hard to see, but there's a lot of liquidity up at about 43,000. Like I said, a lot. So what I'm expecting right now, just very possible. Let me actually I need that open. Give me a second, everybody. I need to fix my display. Bring this back down. I do. Yeah. I'll move up to like say 42, 43. It's already happening. It's happening now, but I think we'll see a move up just like I had drawn, just like I did yesterday. Ethereum looks like a very similar scenario. So if we have time, I'll probably wait until we're in the private group to look at Ethereum. So, but anyway, yeah, this is very, very, very possible on Bitcoin. I don't see any requests in the private chat for charts. Before we move on to the private show, V, do you have a chart you want to see?
No, I want to take it to the private show, man. Folks,
okay.
Listen, a lot of good stuff in the private show, just like Clown World has talked about. I mean, for less than the price of a bottle of water, you're given the keys to the kingdom. Granted, this is not a get-rich-quick scheme. Granted, you're going to have to work your ass off. Granted, you have to commit yourself. But if you commit yourself, you work your ass off, you learn the system, you help us help you, okay? I promise you within 6 months, it's going to start making a difference in your life. Anyone that offers you a get-rich-quick scheme, or something of the sort, it's too good to be true. What we're doing here, folks, is we're showing you how to profit. We're showing you how to leverage. We're showing you the only way, the last and final shoe to drop for anyone in this world is the markets. And we're teaching you how to operate in any market around the world. You could be in Japan, you could be in Germany, you could be on the Fiji Island, you could be in Bali picking lint from your belly button and executing trades. We show you how to do that from anywhere in the world in any market condition. That's what we do. So join us and take advantage, especially the private lab. There's a lot of amazing intelligence there, a lot of great reporting, a lot of great technicals, a lot of great fundamentals, a lot of micro and a lot of macro. It's the 1-2 punch. You can't beat it. Join us over there, Cowboy. Let's do this.
All right, perfect. Give me one moment.
Un momento.
Un momento. Pronto?